The U.S. trade war with China has had a significant impact on the U.S. economy, despite the U.S. government's initial intentions to weaken China's progress. Reciprocal tariff measures, policy uncertainty, and the realignment of global supply chains have only exacerbated economic risks to the U.S. These changes have slowed U.S. GDP growth, reduced consumer and business confidence, and increased costs for businesses. Sectors such as agriculture and manufacturing have been particularly affected. Higher operating costs have resulted in higher prices for consumers, reduced investment by companies, and increased financial instability. Financial institutions faced increased credit risks and potential defaults, especially smaller banks with significant exposure to the affected industries. In addition, the trade war has triggered shifts in global financial practices, including a move toward de-dollarization, which could further weaken the U.S. banking industry. Reciprocal tariff escalations have caused significant economic disruption. By the end of 2019, the U.S. imposed duties on approximately $350 billion of imports from China, and China retaliated with duties on $100 billion of U.S. exports. These tariffs increased the cost of imported goods, resulting in higher prices for consumers and higher operating costs for businesses relying on these imports. In my opinion, the negative impact of the trade war on U.S. consumers and manufacturers was obvious from the beginning. Higher tariffs inevitably lead to higher prices, which reduces people's purchasing power and business profitability. With global supply chains so closely intertwined, imposing restrictions on trade with a major trading partner could not help but affect economic growth. A decline in business investment is also a logical consequence of the trade war. With uncertainty and increased risks, companies naturally postpone or reduce their investment plans. According to the World Bank, the trade war has reduced investment growth in the U.S. by 0.3 percentage points by the end of 2019, with further declines expected. As companies' ability to service loans deteriorates due to higher costs and shrinking profitability, the likelihood of defaults increases. This is especially critical for smaller banks, which have a large share of their loan portfolio in sectors most affected by the trade war, such as manufacturing and agriculture. In agriculture, U.S. exports to China fell nearly 20% between 2017 and 2018, severely hitting farmers' incomes and their ability to service loans. Commercial real estate, already under pressure due to high vacancy rates and the shift to telecommuting, has been further pressured by the trade war as companies have cut back on investment and expansion due to higher costs and reduced demand. In addition, the trade war has contributed to slower economic growth. U.S. GDP growth fell nearly 20% between 2017 and 2018, in part due to a decline in business investment and consumer purchasing power. This slowdown could weaken the financial health of banks by reducing loan demand and increasing the likelihood of defaults. The trade war has also caused significant swings in financial markets. For example, news related to the trade war has consistently affected the Chicago Board Options Exchange Volatility Index, VAX, with spikes in implied volatility leading to widening high-yield bond spreads and fluctuations in stock prices. Volatility caused by a trade war can lead to large swings in the value of assets such as government securities and corporate bonds, which are typically part of banks' investment portfolios. Higher tariffs on imported goods increase production costs for companies, leading to lower profitability and potentially higher default rates on corporate bonds held by banks. Uncertainty over the trade war has also eroded consumer and business confidence. Companies facing higher costs and an uncertain outlook are less likely to invest in expansion, which could lead to reduced borrowing. Consumers concerned about potential economic instability may reduce their investments. Significant uncertainty has also arisen for companies with global production networks. Escalating tariffs, regulatory burdens, and other non-tariff barriers have forced companies to adapt their supply chains, often moving production facilities or sourcing from alternative countries. This has increased operating costs and complexity, disrupting financial planning and stability for businesses dependent on global supply chains. Banks with significant exposure to sectors most affected by the trade war, such as manufacturing and technology, may face increased credit risks. The National Bureau of Economic Research noted that firms with export exposure in China have experienced declines in revenue, profits, and capital stocks since the trade war began. This increased financial stress for firms could lead to higher loan default rates, directly affecting the financial health of banks with significant loan portfolios in these sectors. Agriculture and manufacturing are the two sectors most affected by the US-China trade war, which in turn threatens the financial stability of banks, especially small and regional banks. For farmers, the trade war has severely affected US agricultural exports, especially soybeans and pork, whose sales to China have declined significantly. For example, US soybean exports to China have fallen 80% from their 3-year average, leading to a sharp drop in farmers' incomes. According to the US Department of Agriculture, retaliatory tariffs reduced the country's agricultural exports by $27 billion from mid-2018 through the end of 2019, with soybeans accounting for 71% of the drop. Financial woes could lead to higher default rates on loans from regional banks. Farmers have been particularly hard hit financially, increasing the likelihood of bankruptcies and defaults on agricultural loans. The manufacturing industry also experienced declining revenues and profitability, further increasing the risk of defaults on commercial loans. U.S. manufacturing suffered due to increased tariffs on Chinese products, which increased production costs. This has led to lower profitability and slower investment. Moody's Analytics estimates that the trade war has cost the U.S. economy nearly 300,000 jobs and reduced real GDP by about 0.3%. De-dollarization, the process of countries reducing their dependence on the U.S. dollar for global trade and finance, could also severely impact the U.S. banking sector. Countries such as China and Russia are actively seeking to reduce their dependence on the U.S. dollar, which has already resulted in significant financial losses and support for labor unions. Although the U.S. dollar still dominates the global economy, the trend toward de-dollarization could undermine the stability of U.S. financial institutions by raising borrowing costs and further narrowing net interest margins. This could exacerbate the financial woes of U.S. banks already struggling with troubled commercial real estate loans and rising interest rates. Overall, the U.S. trade war with China has had a major negative impact on many sectors of the U.S. economy. Increased tariffs, political uncertainty, and the realignment of global supply chains have increased risks to the U.S. financial system. The sectors most affected by these shocks, such as agriculture, manufacturing, and real estate, have put additional strain on banks in the form of higher default rates and deteriorating asset quality. The trend toward de-dollarization also poses a potential threat to the dominance of the U.S. dollar and could further weaken the position of U.S. financial institutions. While the impact of a trade war is still difficult to fully assess, it is clear that its costs to the U.S. economy will be significant and long-lasting. Thank you for watching this video. I hope you found the information and analysis presented useful and enlightening. If you enjoyed the content, please support us by liking and subscribing to the channel. Your support is very important to us. Stay tuned, there is a lot more interesting content to come. I wish you a great day and success in all your endeavors.